Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to go through the Forex market wrap. We're going to see how the market's fared this week. And as you probably know, there's been a huge change in the last day on the markets. So let's go through the Forex market wrap. We're going to start off with the news that we expected first. So when we're talking about the news that we expected, we talked about the start of the week and the week ahead analysis, the Euro PMI manufacturing data, which actually came in better than forecast, seeing a slight positive number there. Still a slight decline in the manufacturing PMI, but it was a better number than they anticipated. Services PMI came in better. Euro kind of had a little bit of a sort of bullish turn against the sort of weaker currencies. The other news that we looked at was the New Zealand dollar. We had the RBNZ rate statement, and they hiked rates from 0.5% to 0.7%. The market did take this as priced in, so we did see some downside to the New Zealand dollar. This was actually mainly due to the press conference, which we outlined that you should wait until the RBNZ press conference is over before making any trading decisions. And what we saw was the RBNZ a little bit more, or slightly, ever so slightly dovish in their tone in terms of how aggressive they would hike rates. I think we also saw the fact that the market expected a jump of 50 basis points rather than a 25 basis points jump, and instead we got a 25, which put a little bit of a sort of dampener on the move there. Dollar prelim GDP data came in at 2.1%, so it was an increase from the previous of 2%, but it wasn't as forecast suggested at 2.2%. So we saw the dollar obviously continue to rally this week, apart from most recently, which we'll talk about in a second. And what I mean by that is COVID cases. Okay, so we've seen COVID cases in Europe rally. We kind of touched upon this in the week ahead analysis. We talked about the risks to the market, which was COVID cases kind of soaring in Europe. However, in the past sort of 24 hours, South Africa have found a new variant, which they are saying is basically more not necessarily deadly, we don't know that information yet, but more transmittable, more aggressive variant of COVID-19, and that has actually seen the markets drop quite significantly in terms of it moved very quickly from a fairly risk-on market to a very aggressive risk-off. We started to see stock markets decline. We saw risk assets decline, so things like WTI, which we were looking for bullish opportunities on this week, dropped significantly. And the thing is, with news like this, we just never know when that news is going to come out. I think something like this is quite was quite a shock to the market, and we've seen some downside. So let's go take a look at the downside. Let's start with the dollar. So even though the dollar typically, or what I looked at was the last time we had a sort of announcement of a new variant, the dollar actually strengthened slightly. So we have seen, however, a little bit of a decline in the past day. We saw prices move to the downside, but this may only be a little bit of a false move, as if the market is going to move into that risk-off mode, the dollar might be one of the currencies that benefits from it, and we may see a continuation up to $97. Alternatively, a move down would be on the cards. We are in a strong upward trend on the US dollar, and it is very overextended at the moment, so we could see a drop to 94.55, these highs in here. However, if the market, like I said, is going to move into that risk-off sentiment, then we could really see the dollar remain bullish. Going on to Kiwi US dollar then. So we looked at Kiwi in line with the RBNZ statements this week. We were talking about on the week ahead analysis to watch either the break of the high or the low on the weekly. Price very quickly broke the weekly low, and ever since then we've been moving to the downside. Again, very aggressive move down this week, coming into an area of support. However, if, like I said about before, if this variant of COVID-19 is going to almost push countries back into lockdown, essentially, then we could see some further downside to the likes of the New Zealand US dollar. Same with dollar yen, really. So, as you know, typically the news of a something that could harm the markets or see the economies of countries slow down, we saw a huge move in yen. Yen is the safe haven currency. When the market is looking to put their sort of cash into something, typically the yen would be the market that gets the sort of strength, and that's what we're seeing here against the dollar at the moment. We kind of capped above this 114.35, and we've seen some huge downside in the market, and that's going to look likely to continue in the short term, especially if the news just continues to get worse about this new variant. So keep an eye on dollar yen. So we were talking about that yen strength and for a while now, especially on the strength meter, and it looks like it's here to stay right now in terms of fundamentally. And finally, crude oil then. So we did talk about the fact that if price started to form a double bottom pattern at this support, then we could start looking for long opportunities. If you did look for long opportunities in and around these areas, then you would have done well until obviously the news came out and we saw a huge drop in oil. And again, oil could be a market that really suffers. If we roll back to sort of the last time that countries went into lockdown, oil really, really struggled. We saw big oil problems and the market really dropped quite significantly. Is the same going to happen here again now? Potentially, and the risk is now to the downside for oil. I feel like the more likely thing that's going to happen is the fact that, well, just to put it into perspective, the UK has banned flights from South Africa. If other countries start to follow in sort of, again, adding countries, especially significant countries to the red list, then things could start to really ramp up here for oil, and we could see the risk-off sentiment really damage the gains that oil has made over the past year. So let's see what happens here with oil. This fundamental news could really start to push prices to the downside, and again, what we may see is an oversupply of oil, which is what really caused this sort of crash previously. And if there is so much supply, not enough demand, the price naturally falls, and it could happen here again. So thanks for watching the videos this week. I did hope you enjoyed them, and if you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more of our Forex content, and I'll see you for the week ahead analysis at the start of the week. Cheers.